You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And, of course, we are celebrating today. Yeah, we got a lot to celebrate today. I'm looking at the National Educational Support Professionals Day.
It is what it is.
You know, that one, we're not going to, nothing wrong with the support professionals, right? We like that one. National Take a Hike Day. I don't know about that one. I might tell somebody to take a hike, but I don't know. I love this one, Josh. I'm looking right here. I am a foodie, and one of my favorite foods in the world doesn't agree with me a lot, but homemade bread. Can't go wrong with homemade bread, and you throw a little butter on top of that because today now bread. We don't want to go too fast here because we've got sourdough bread, we've got banana bread with chocolate chips. It used to be fun to go to San Francisco and get sourdough bread. San Francisco is not what it used to be. But, I still like that bread. Squaw bread, I get a turkey sandwich on squaw. That's a good one. A nice baguette. I could probably do a whole show on different kinds of bread because I am a connoisseur. Now, yeah, there you go, Joe. Bread. Joe might be right. Bread is money. Okay. So... But Joe, it's me, right? So if there's an opportunity to be eating something, I'll be there. I'll be right there. Edna, glad you're sharing this content. We appreciate everybody that shares what we have to say. Get the message out. So I digressed. I went off and I started talking about all different kinds of bread, and we know we're still able to celebrate National Butter Day. Yeah, I like adding a little butter to the bread. That's a good way to go. I'm a butter guy. My wife gets mad at me because I put too much butter on things, but I like it. And once, we've got all the food groups here because we've got bread is a grain, right? So I think grains go into the vegetable world. If we have banana bread, then we've got fruit in there. Throw up a little butter on there. We've got dairy on there. So we're getting most of the food groups. So what do you do after you have all the food groups covered? Well, of course, then you just go, okay, I lost the bread bowl story. You go to baklava, of course, after you have all that bread, you go to baklava day, right? So we've got all the food groups covered. Now baklava has to be healthy, right? Because you've got generally honey, that's a healthy food, right? A lot of times they're going to put some grain in there. You've got sugar in there. You've got, I don't know how to make baklava, but it's got to be healthy, right? So maybe we have to have more of that baklava. So let's just move right along. Otherwise I could be celebrating all day here. The only thing we need to add to that is a little bit. Josh, we got the bread butter. We got the baklava. We need a glass of wine to go with it. I mean, can't go anywhere. Pistachio. Okay, Joe. Joe, you should be an expert on baklava, right? I mean, you're out there. You're now we've got him international, Joe, because I saw that you're on the West Coast. You're on the East Coast. I saw that you're moving back to the United States. I don't know what that exactly meant, but a lot of different things coming from our buddy Joe. Let's take a look at what the markets are doing today. So the Dow Jones now down 172 points. That's not a pleasant sight, but I'm sure there's a good reason for it. S&P 500 down 587. The NASDAQ down 5.47. Oil down $1.92 a barrel. $1.92 a barrel down on oil. Do you think that's going to mean our gas prices are going to drop at all? I'm going to guess. I haven't looked at them yet, but I'm going to look at them with you right now. My guess is the gas prices have not dropped. Let's take a look. Overnight, they're up 0.2 of a penny. California, 469.2. Josh is at 398.1. Joe, down there where you were in America, $3.31.5 when you're in Florida, $3.31.5. Okay, so that's a little bit of a benefit. Lori, you're still paying. Lori's still got 314.7, so she's better than you were, Joe. Hawaii, 435.5. So we're still not looking good on those prices. Let's see what else we can find going on. The Rittenhouse jury, they're resuming their day 2 of deliberations today. Fascinating how many times the prosecutors have gotten scolded by the judge. So that'll be interesting to see what happens in that whole thing. And the media, a lot of the lame media, they've already got their verdict in, which to me, that is just inciting riots. I don't know why we keep getting these things and why some of the media gets a pass on this. But I think, is the media complicit in the riots that are going on? I mean, they've had to call out 500 National Guard troops in Kenosha, Wisconsin. Why? Well, maybe because the media is telling us false information, right? The young man goes to protect some businesses, help protect. And the president calls him a white supremacist. I don't know where he comes up with that, but I don't know where he comes up with most of his things. And moving right along to the president, holy cow. Think about this one. So have you noticed what the biggest expenditure is in the president's spending bill? Now, he calls it Build Back Up Better. Do you know what the biggest expenditure is in that bill? Are you ready for this one? I mean, I couldn't believe this when I heard the number one expenditure in the president's bill. $285 billion to go to the wealthiest of Americans in California, New York, and New Jersey. $285 billion. It's the biggest expenditure in the entire bill. So why is that? Well, how is it happening? Well, the president wants to give more tax breaks to the rich and famous. Now, no one's telling you that. You're not seeing that on MSNBC Hee-Haw. You're not hearing it on the Cannabis News Network. I should change it to the Clown News Network, right? Because maybe cannabis is better than the Clown News Network, right? So, and I'm not a fan of cannabis, but I mean the Clown News Network, that's even worse. But $285 billion. Now, there's several billion dollars in there so that child tax credits can go to people with no social security number. Think about that one. What does that tell us? What does that mean? Well, those are the people that are here illegally. My blood boils when I see this. We're gonna have to get on with our broadcast today. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Retirement may be changing what you need in a new home. What are jumbo loans? We've got a workshop on that one for you today. Is failing to plan, planning to fail once the divorce is final? We've got that better outcome. And a featured home brought to you by myfavouritelender.net. Myfavouritelender.net. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990. or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. We'll be back in just a bit.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Dow Jones now down 165 points. The NASDAQ is down 13.6. The S&P 500, that one right now is down 0.70. 10-year Treasury down 2 basis points. Mortgage-backed securities are up today, up 16 basis points, means home loan rates are down just a little bit. Why is all that happening? Well, Mortgage Bankers Association, they released their mortgage application data for the week ending November 12th, showing that overall application volume decreased by 2.8%. Applications to purchase a home were up 2%. Refinances decreased by 5%. Housing starts for October were reported at 1.52 million unit pace, which is down 10,000 from last month's revised report of 1.53 million. Housing permits, which are a good indicator of future starts, increased to 1.65 million units. This is up 64,000 from last month's revised figure of 1.586 million units. We've also looking at the other issues of the day in the mortgage world. A lot of the home builders, they came out with their housing report. The National Association of Home Builders came out with their housing market index. Real-time read on builder confidence rose 3 points to 83, which is the largest monthly increase since February. Looking at components, current sales rose 3 points to 89. Sales expectations were unchanged at 84. Buyer traffic rose 3 points to 68. The report is an index of 0 to 100 with any reading above 50, signaling expansion. Builder confidence has been increasing the last 3 months and is at very strong levels. The biggest problem with builder confidence or the builder numbers is just the supply chain. Housing starts, they fell once again, down 0.7% at 1.53 million unit annualized pace in October, and nearly flat on a year-over-year basis. Single-family starts, which is the most important, was down 4% at 1.04 million unit pace and is down almost 11% year-over-year. The only area that saw an increase in starts was in 5 or more units, which rose 4% from a new construction standpoint. Not seeing the homes we need for supply being built, this should continue to contribute to tight inventory. Permits, which are a good forward-looking indicator of future supply, were up 4% last month and 3.4% year-over-year. Single-family permits rose 2.7%, but are down 6.3% year-over-year. Housing units that are authorized but not started continue to rise, showing that the backlog is growing. It grew almost 5% last month at 265,000 not started units and is now up 45% year-over-year. 265,000 not started. They've got the permits. They just haven't started construction on them. Why do you think that is? That's probably just because of that supply chain issue. That's the Mortgage Minute today Brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva has got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Better outcome segment today. Retirement may be changing what you need. Oh, that's the wrong story. I got to click the right button here. Is failing to plan, planning to fail once the divorce is final? It was Benjamin Franklin who said, if you fail to plan, you plan to fail. What he meant was that basically success does not happen by accident. It takes planning, knowing where you're heading and how you'll get there. If you fail to do this, you may stumble upon a win here or there, but the ultimate success won't be in that stumble. Well, it may be easy to define what Mr. Franklin meant by this saying. What is more difficult is the planning and knowing what you want to plan for and towards. That's always the biggest question. What are you planning for or towards? A successful divorce settlement is a result of putting the pieces of the puzzle together in such a manner that both divorcing parties come out of the divorce whole, or at least on the road to recovery. When real property and mortgage financing are present in the divorce settlement, divorce mortgage planning should be a priority. There are certain aspects of the real property itself that may not only have an impact on the marital balance sheet, but on the type of mortgage financing available when one spouse is retaining the real property. Aspects such as who's on the title and for how long? What was the purpose of the most recent mortgage financing transaction and when was it? What is the value of the real property and when was it obtained? There may also be certain aspects of financial planning as part of the divorce settlement, which may also impact future mortgage financing. These financial planning concerns may include mitigating capital gains taxes by leaving both spouses on the title to the real property, the lack of income due to lump sum payouts versus monthly support, the division of joint marital debt and how it is to be paid. There are many aspects of the divorce settlement agreement that may have a negative impact on either spouse's ability to obtain future mortgage financing, whether financing the existing mortgage on the marital home or selling the home, and both spouses plan to purchase new homes. When you fail to incorporate divorce mortgage planning into the divorce settlement process, the divorcing spouses may fail when it comes to obtaining mortgage financing in the future. Divorce mortgage planning is a holistic approach to the process of evaluating mortgage options when in the context of the overall financial objective as they relate to divorcing situations. As a divorce mortgage planner, I myself as a certified divorce lending professional can help you identify any potential conflicts between the divorce settlement, final planning, and home equity solutions, as well as any real property issues involved in your case. The role of the CDLP is to help integrate the mortgage selected into the overall long and short-term financial and investment goals to help minimize taxes, minimize interest expense, and maximize cash flow. Our goal, to help divorcing homeowners make more informed decisions regarding their home equity, the solutions and mortgage financing opportunities during and after the divorce. Incorporating divorce mortgage planning into the settlement process makes it easier to identify possible solutions and assist both parties in letting go of counterproductive positions and emotions. In addition, a CDLP can assist in taking stock of possibilities, resources, and answers regarding the marital home and other real property and mortgage financing opportunities. A successful divorce settlement results from effective communication and strategic negotiations in such a manner that both divorcing parties come out whole or at least on the road to recovery, working together as a team and incorporating divorce mortgage planning into the settlement cycle with a certified divorce lending professional will ultimately result in a better solution and better outcome. As always, I suggest get a copy. It's free of our Divorce Your Mortgage workbook. And you get that, if I can find the right sheet here that has all of the data there, mydymworkbook.com. mydymworkbook.com. That's where you're going to get the workbook. You fill out that out, send it back. We'll put together a full report for you as a gift from your friends at Ron Siegel Radio. Always love getting these Isn't it fun to give out free stuff? We get to do that all the time. Also, visit mycdlp.com. Mycdlp.com. We put out an article every week on divorce. So I highly recommend you take a look at these articles. Go and check them out. See how they can benefit you, how they can benefit your family. Josh, I think we're going to go to break a little early so that we can get the workshop in the next segment. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, what are jumbo loans? We'll talk about that. It's a workshop for you. All that and more. We'll also talk about retirement, maybe changing what you need in a home. And we've got our featured home segment brought to you by myfavouritelender.net. All that and more. You can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio, and if you miss any part of our broadcast. Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. A workshop for you. We'd love to put together these workshops to share them with you. What are jumbo loans? As I've told you many, many times, our goal here on Ron Siegel Radio is to educate you. We bring out a lot of different information, different resources. I think there are items that people are going to find valuable. We put them all in our workshop section on our YouTube page, on our Vimeo pages, all of our social channels. You can find all of the ones we've done. We've done why you don't need 20% down and no mortgage insurance and veterans loans and first-time home buyers. So today we're going to talk about what are jumbo loans, and obviously I look forward to helping you learn about the jumbo loans and how they work. You know me, right? I've been doing this for longer than I care to admit. All the way to the turn of the century, maybe even a little before that. Started buying homes back in the early 80s, about 2,300 radio stations. We're probably pushing 2,400. I think that 2,300 number might be a little bit old, but probably pushing 2,400 radio stations or radio shows. Right now, I think there's 3 stations that are carrying us. So we've got some good information for you, we hope. Today, we're going to share what jumbo loans are, how they work, the process it takes to get one. So let's get with it. So you start off, you're shopping for a home. One of the most important steps in shopping for a home is identifying the type of mortgage that you qualify for and is best for you. That's the big issue. But if you live in an area where home prices are crazy high, then you may not qualify for the conforming home loans. You may, in fact, need a jumbo home loan. It's important to understand the ins and outs of the jumbo home loan. So what are jumbo home loans? It's a mortgage loan that exceeds the limit set by the Federal Housing Authority, otherwise known as FHFA. Jumbo loans cannot be secured by the government-sponsored Fannie Mae or Freddie Mac, which makes them riskier loans for lenders. That's the issue right there. Jumbo loan limit, each year, Fannie Mae, Freddie Mac sets limits on how high the mortgage can be that they'll purchase on the secondary market with their conforming loan limits. Loan limit for 2022 We don't have that exactly yet. The rumor is 625,000. The loan limit for 2021 was 510,400. Anything above would be a jumbo loan. Anything below that is considered a conforming loan. There are high balance loan limits in high cost areas. There's an interim level where you could choose to go conforming or jumbo. So we're watching for the new numbers to come out right now. Now, of course, you can get a little bit more complicated than that because there's several areas across the country, like in California, Hawaii, and Washington, that have what's called the high balance loan limits. Now, it really gets confusing here because Riverside County, San Bernardino County, those are basically conforming only. Los Angeles County, Orange County, San Diego, Ventura, we have higher limits than that. But we're going to keep it simple, and essentially anything above 510, 400, we're going to say is a jumbo loan. And I just told you that's probably going to go to 625,000 for next year. Options with jumbo loans. You get a jumbo loan in a variety of terms and repayment schedules, can be fixed or adjustable rate loans. They do have stricter requirements. Why are they stricter requirements? Well, it's because they're riskier. They work differently than conventional loans because they have these stricter requirements than the other types of loans. And you'll have to meet specific property types, down payment requirements, credit scores, debt to income ratios. So let's go over the qualifications to start with. Let's talk about the down payment and how much down payment you need to qualify for. In general, jumbo loans require more down payment than a conforming loan. It's common to see lenders require 20% down on jumbo loans for a single family residence. There are programs that will go lower. Yes, there are doctor programs that'll go lower. There are some mortgage insurances that'll cover it. There are some investors that just say, something, we're going to go to 85 or 90% loan to value. That means 5 or 10 or 15%, 5% down. You can also do that. Reserves. So the lenders will require, in some instances, reserves. They want to make sure there's money available, liquidity after closing. It's required to show that you have a few months of payments in the bank. They want to make sure that if they're going to lend you money, that you can pay it back. Again, because these loans are set by individual entities, they kind of get to make their own rules. So they're not always going to be the same. So you might go to one bank and they've got one set of rules, and they might tell you you do not qualify. Well, I've told you before, don't go to the bank. It's not a good place for you to go for home loans. Go to a mortgage broker, a mortgage banker. Why? Because they know what the banks are looking for. They're your personal shopper. So now let's talk about down payment. How much down payment do you need to qualify? In general, jumbo mortgages require more down payment than a conforming loan. It's common to see lenders require 20% down for loans for a single family. I already talked about that one. Let's move right along. Credit score, right? Your credit score is a major factor when it comes to getting a jumbo mortgage. You'll usually need a credit score of at least 700 to get a jumbo loan for $1 million and 720 for jumbo loans between $1 million and $1.5 million. If you're going over $1.5 million, you'll probably need 740. Again, when you call a mortgage banker or a mortgage broker, they are out there doing the shopping to see who may have an interest, an appetite for something more than that. Debt to income ratio. Your debt to income ratio is also a factor. You'll need a debt to income ratio, usually between 40 and 45% in order to qualify on most jumbo programs. The lower the industry standard, the lower than the industry standard, 50% debt to income ratio. So that's what you can get on a lot of loans, but there's only a few places to get those 50s. So again, mortgage banker. So when it comes to jumbo loans, the interest rates are typically higher than the standard convention, and they have stricter qualifying guidelines. Whatever loan you're getting, there are always closing costs, which can range between 3 to 6% of the total value. This can add up for a jumbo loan, so you want to be prepared to cover your closing costs in addition to your down payment. Jumbo loan qualifications typically are more stringent than conforming loans. Your lender will want to see up to 2 years of W-2s, tax returns, 1099s. Bottom line is that jumbo loans are out there. They are not that difficult to get, but you'll need to be prepared to have more money down have great credit and reserves, be prepared to share more income documentation. And that's why we say call you, let's plan ahead. It's important to consider every requirement before you get a jumbo loan. But once you're ready to go, make sure you're working with a licensed mortgage lender who can help you navigate through all the details and get you into your dream home. If you want more information, give me a call, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Let's go to info@ronsiegelradio.com if you have any questions. I am here. Our team of educators is here to help you, and we appreciate you taking a look at this workshop that we have for you. Love putting together the workshops and sharing the information for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, retirement may be changing what you need in a home. We've got a featured home brought to you by myfavoritelender.net. And we might even have time today, Josh, for your Credit Matters segment. We'll see about all that and more. Reach me anytime, off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The featured home segment today being brought to you by myfavoritelender.net, 4900 East Chapman Avenue, number 97. This is in Orange. 1 bedroom, 1 full bathroom. The it's brought to you, listed by Melinda Johnson, Freedom First Properties. Step inside this modern, luxurious loft-style home with an open concept floor plan, and you will have to decide what you want to fall in love with first. The gorgeously remodeled kitchen features white shaker cabinetry, quartz countertops, and recessed lighting. Look at the pictures of this. $410,000 is the list price from Melinda Johnson. FHA, 3.5% down. You're looking at $1,725 a month. 20% down. You're looking at $1,473 a month. 25% down strategically. You're looking at $1,296 a month. That would be APRs of 4.204, 3.586, and 3.25, NMLS 217037. Want more information about this or any properties? Give me a call at 800-306-1990. I'll put you in touch with Melinda Johnson. Again, this one, the featured home, 4900 East Chapman Avenue, number 97, City of Orange, listed for $410,000. That is the featured home. Brought to you by myfavoritelender.net. Real-time real estate segment today. Retirement may be changing what you need in a home. This past year and a half brought about significant life changes for many of us. For some, it meant entering retirement earlier than expected. Recent data shows more people retired this year than anticipated. According to the Schwartz Center for Economic Policy Analysis, 2021 saw a retirement boom. Quote, at least 1.7 million more older workers than expected retired due to the pandemic recession, unquote. If you've recently retired, your home may not fit your new lifestyle. The good news is you've likely built up significant equity that can fuel your next move. According to the latest Homeowner Equity Insights report from CoreLogic, homeowners gained more than $50,000 in equity over the past 12 months. That plus today's seller's market presents a great opportunity to sell your house and address your evolving needs. Remember, that is a national number. The number is about triple that here in Southern California. You can move closer to the ones you love. The 2021 Home Buyers and Sellers Generational Trends Report from the National Association of Realtors provides a look at the reasons people buy homes. For those reaching retirement age, the number one reason to buy is the opportunity to be closer to loved ones, friends, or relatives. If you find yourself farther from your loved ones than you'd like, retirement and the equity you've built in your home may enable you to move closer to the people in your life who matter most. You can find the right home for your needs. Not only can your equity power a move to a new location, but can also help you purchase the right size home. Lawrence Yoon, chief economist at NAR, National Association of Realtors, says many home buyers 55 and older choose to downsize or buy a smaller home when they make a purchase. Quote, clearly from the age patterns, young people want to upsize and the older generation is looking to right size or downsize, unquote. Whatever your home goals are, a trusted real estate advisor can help you find the best option for your situation. They'll help you sell your current home, guide you as you buy your next one while you move into this new phase of life. Bottom line, if you've recently retired and your needs are changing, you're not alone. Let's connect so you can get better sense of how to find a home that'll match your situation. You might even find that the reverse mortgage might be in your best interest if you qualify for that age 62 and above. So that might be a real benefit to you to look into that one. That's the Real-Time Real Estate segment, again, brought to you by area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. You can also go to rsrhomedigest.com, rsrhomedigest.com, and get that information as well. And as I suspected, we do have a little bit of time for a Your Credit Matters segment. How to create a budget with a variable income. Budget can help you take control of your personal finances. However, budgeting plans and guides may assume your income stays relatively the same throughout the year. For many people, that's not the case. You might have an irregular income because you run a business, work on commission, pick up side gigs, or don't get set hours at work. No matter the reason, budgeting with a variable income is not impossible, even if it is a little trickier. Setting the foundation, creating a workable budget can help bring certainty to your finances. It could be even more important for people who often experience the highs and lows that come with inconsistent income. Start with what you know. You may not have a steady income, but you can start by creating the expense portion of your budget. Getting these numbers down can give you a baseline to guide from and help you avoid unexpected setbacks that might knock other people off course. To start, try to determine how much you'll need each month for different types of expenses. Some bills stay the same each month, such as your rent or mortgage payment, phone plans, insurance, childcare, loans, and streaming services. It can be relatively easy to determine the monthly amount you need for each of these expenses. Other household bills can vary, such as food, utilities, and gas. While you might not know exactly how much you'll spend each month, you can estimate an average monthly amount. Do not forget less frequent expenses. Set aside the monthly equivalent of what you'll need for infrequent expenses, such as vehicle registration, gifts, veterinary bills, vacations, and subscriptions, or to include spending money in your budget. Create categories based on how you like to spend your money or free time to track your fun and money expenses. Many people also create expense categories for their savings goals. Perhaps you're saving for retirement, establishing an emergency fund, buying a home, or have another goal in mind. Set a target for how much you want to save each month and add it to your budget. Create a spending plan that does not rely on your income. You can try different budgeting systems to see which one works best, but But one trick when you have variable income is to budget using fixed amount as your income. For example, you might add up all your expenses and find that you need $3,000 a month to cover your bills. Enjoy the month and make progress toward your financial goals. Perhaps you're in the midst of a busy season, making $4,000 a month. Instead of increasing your budget during these flush months, set aside the extra $1,000 in a special fund. We've called that your family bank. It can be part of your emergency fund or kept in a separate account. Then during months when you make less than $3,000, pull from that fund to make up the difference. The system can add certainty and predictability to your finances, something many people with variable income lack. You could think of it as paying yourself a fixed salary from your variable income. Build your safety net. It can take time to build up the funds you need to weather ups and downs. You may want to jumpstart the process of spending fast and set aside the savings. It's with a spending fast. Or look for ways to regularly save money to decrease your baseline expenses. Ideally, you can build up enough of a cushion that you can have the money set aside for your salary before the beginning of the month. So you may even get to the point where you have the next 2 months covered, which could greatly ease financial anxiety. A large safety net can also open up new opportunities. If you have a business, you may be able to take on larger projects that pay more but require upfront expenses, or could be pickier about side gigs and hold out for offers that pay the most. Stay flexible and reevaluate your goals. Budgets do not have to be rigid all or nothing systems, and they will inevitably naturally shift over time, partially because your income and expenses may change, but also you'll achieve and set different goals. It's important to remember that financial health does not come from making the numbers on a spreadsheet match. In the end, budgeting should help you take control of your finances and make progress toward your financial goals. If you have to take a short break or make a change mid-month, that's okay, but try to find a system that works for you. That's the Your Credit Matters segment, brought to you by creditsanitizer.com. I think that's who we've got that for. Oh, mysocallender.com. I'd look at the screen. Josh already puts the cues in there for me. I'm just, I'm the host here that's a little bit slower on the uptake. Your Credit Matters, brought to you by mysocallender.com, mysocallender.com. Take a look, because we don't have a lot of time. We can't get another segment in, but we can go back and take a look at what some of the markets are doing again this morning. So, and I will share with you one of the things that I talk about on a regular basis is how the markets overreact. The last few days, last few business days, the bonds have been down dramatically, which means that stocks have gone, which means that interest rates have gone up as far as the mortgage-backed securities. So remember that the markets, one of the things that happens with the markets all the time is they always overreact. That's one of the few things that we can count on from the stock market, is that it will always, always, always overreact. So when we saw those big down days, we were telling our private clients, don't go and lock in interest rates right now. What you should do is watch the market, talk to your mortgage planner, and just see what's right for you. Now, if you're looking to close your loan and you've got a very set fixed deadline, you might have to lock that loan in. But if you're not on a fixed plan, if you don't have the real short time horizon, best to wait a little bit. And like I said, right now we've seen that the market has recovered a little bit. Then we can look and see, okay, what do the technicals tell us? Well, we have a Fibonacci retracement at 102.27, and we're sitting right now at 102.30. So we're above that. So if we can close above that, that'll create a new floor for us, a new level of protection. And that's the area where we want to keep watching and see, okay, if that creates that floor, then the bond might go up even more over the next few days. It might be even better for you. So we're always watching those numbers to see what makes sense. And then I highly recommend calling someone on our team, and they'll be able to give you guidance on, hey, what do the rates look like based on this? Should we lock now? Should we not lock now? What makes sense? That's what mortgage planning is about. You can go online and see what the rate is at any given time. But do you want the best rate right this minute, or do you want the best rate when you close? Trick question. You want the best rate any time between now and closing time, right? So if it's best now, good. If it's best at closing, good. But if it's best sometime in the middle, that's what we want. And that, no one's got a crystal ball. No one's perfect. But if you understand the markets, if you study the markets, you might be able to give an educated guidance. You're not going to be perfect all the time. If you were perfect all the time, you wouldn't be sharing that. You'd be trading the bond market. So just give you a little bit of insight right there. As always, we ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Tides that I tried to swim against.